Hello. So this panel is Beyond Cryptopia. My name is Sam Abbassi. I'm president of Bushido Lab. We're a cryptocurrency blockchain development company. We're an industry service provider. We build core protocol infrastructure for different blockchain products. We were the development team behind Anon, fork of Bitcoin, and ZCL. We're also working now with a local company called Levelblocks on an Oracle audit and compliance solution. So typically when I moderate panels, I let it kind of go a little bit free-flowing, kind of pick up and go. So I'll have the panelists actually introduce themselves. Dan, do you want to start off?
Sure. My name is Dan Eisner. I'm the CEO of Digital Reserve Technologies. We're a developer of commodity tokens and are working currently on OilCoin, which is intended to be an oil-backed stable coin. And we're in the process of putting a beta together for that OilCoin. Ultimately, it will be a global money token, so usable as currency.
I'm Cory Johnson. I'm the chief market strategist for a company called Ripple, based out of San Francisco. We're probably, I'd argue, I don't know, you guys might have an opinion, this is probably the largest company in blockchain that's actually doing anything with crypto. And we've rolled out software with over 100 banks and financial institutions to allow for quicker, cheaper, accurate movement of value across borders, sometimes using cryptocurrency.
My name is Katya Fisher. I'm a partner in the law firm of Fisher Cataliotti. We're a New York-based law firm that focuses on new technologies, including blockchain and cryptocurrencies. I represent a number of projects in the space, including several blockchain protocols, startups, as well as media companies and tech companies that are ancillary to this industry as well.
Good afternoon. G'day, I'm Patrick Harding. I'm head of product at a company called Hedera Hashgraph. We're a new emerging sort of distributed ledger tech sort of company that's focused on payments, specifically micropayments, smart contracts, file storage, lots of interesting things like that. Okay, awesome. So I think you guys have already been told, but there are screens up here. Submit questions, and then we'll kind of take them as they go if they flow into the conversation. So the panel is called Beyond Cryptopia, and from experience, I teach cryptocurrency and blockchain development at Miami-Dade College, and some of my students are here. And kind of a good way to start with this is actually being in Cryptopia, so starting with Bitcoin. So to kind of lay the groundwork, blockchains come from Bitcoin in a sense. So basically, what Bitcoin is that it's a protocol, it's an environment for transaction validation. You basically pay a fee to miners to validate your transactions, which introduces the idea of censorship resistance and decentralized consensus, basically. So it's a trustless environment. So what I wanted to get into now is kind of the enterprise application of all of this. So what we see now are Hedera Hashgraph and Ripple kind of applying the underlying technology and infrastructure of blockchain to different businesses, to corporate, basically. So Patrick, the first question is for you. What are the most readily, or what are the most easily accessible applications that you can build on Hedera Hashgraph, and what's Hedera trying to do in the blockchain space? Sure. So there's a lot of noise in the blockchain space, I've noticed, over the last 6 months to a year I've been involved. A lot of things have been tried, a lot of things haven't worked. I suppose what we've been looking for really is the killer app for this technology. One of the areas we're excited about, because we think we can enable this, is, as I mentioned, the notion of micropayments, which is the idea of allowing, on an ad hoc basis, individuals to pay for essentially digital content where it might only cost you, 5-10 cents. It might be a song, it might be a video stream, it might be a newspaper article, but you can pay a few pennies for it, and the fees associated with that are a hundredth or a thousandth of a penny. And you can do that in real time on an ad hoc basis. What it, I think, enables is artists to be paid directly as opposed to having to deal with services like Spotify. It shifts us away from advertising-based models where you've become the product as opposed to buying product. Nothing's free, there's no free lunch. A number of things like that. So I think micropayments can be a game changer in many ways.
And so, Cory, is Ripple basically trying to attack the same pain points or trying to solve the same problems that Hedera is hitting?
No, although there's an interesting company called Coil, which is using XRP to do that. So when we use cryptocurrency, and all of our software doesn't use cryptocurrency to be clear, we use something called XRP, which we look at as kind of Bitcoin 2.0. It's Bitcoin without mining. It's Bitcoin with a faster transaction speed. It's Bitcoin without the power consumption that has become the bane of the mining world. But I think, more importantly, I think we're thus far we might be one of the biggest companies in blockchain, but it's early. We just see this very obvious problem of moving money across borders. It's very certainly present here in Miami, which is the international hub that this city is and this region is, which you just heard in the last panel. But I think it is ridiculous that in 2018, I can send a text message with an emoji and a GIF file to a friend in Rome, or I can send an email to a friend in Sao Paulo with an attachment of an Excel spreadsheet and all kinds of useful information. But the fastest way for me to get money from here to Mexico City is to put $10,000 in a briefcase and fly it there. That's pathetic, and yet that's the state of the art right now when it comes to the way banks and remittance companies and financial institutions move money. Big corporations park money. Companies like Amazon, but much discussed here, Amazon has $1 billion laying around in Nostro accounts for the potential use to make a payroll or to pay a customer or to pay a vendor. It is crazy that in this era of digitization, this era of container ships that have a standardized methodology for moving cargo around the world, we don't have a truly global financial system. We don't have global messaging and instant data messaging in the world of finance. We don't have instant settlement. That's now possible using XRP and using Ripple's software. And so we're trying to attack that multi-trillion-dollar problem of moving money across borders. It's a problem that's lying there and waiting to be solved, and we think we've solved it with the software we've already got in the marketplace. So we've got 100 customers out there that are paying us, remittance companies, banks, other financial institutions. These aren't pilot programs. These are actually software that's deployed in the marketplace and customers paying us for it. And it's very early days, but we're very excited to take the cost. The costs are ridiculous right now. I mean, you can send 50 euros somewhere across a border, but it doesn't really make sense because it's going to cost you 10 or 15 euro to do it. But you can't send 50 cents. We're changing that with our software, and we're doing it now. And it's pretty exciting to see what that's going to look like.
Dan, so with respect to settlement, you're kind of actually doing something very relevant in that respect as well. I mean, so for those of you who don't know, Bitcoin and other cryptocurrencies in large part aren't backed by anything tangible, right? It's backed by the trust, much like the US dollar is backed by the trust in the US government. But now we're seeing tokens in different cryptocurrencies that are actually backed by commodities. So OilCoin is one. How does that relate to settlement?
When we looked at cryptocurrencies, probably beginning about 2 years ago, we saw that, in fact, the crypto wasn't backed by anything other than a belief that the person who you were trading it to would somehow pay you something for it, often another cryptocurrency. And so what we saw was a system where you had essentially vapor moving from pocket to pocket to pocket with a price associated with it. And we thought that the future was going to be something different. That what we looked at with the technology to create a cryptocurrency created the opportunity for the first time in human history to allow global capital to be aggregated in a fungible instrument. And so the basic idea that we had was that if you take a cryptocurrency and pair it with a valuable asset and have a trust system to demonstrate that asset is owned and in fact backs the cryptocurrency itself, you wind up having the ability to create an alternative money supply. And so when we looked at the problems that were facing citizens in emerging markets, we saw that the currencies they had were essentially fiat currencies by somewhat unstable governments, by governments that had currencies that had inflation built into them. And so by developing OilCoin, we're ultimately taking what we know to be the world's most liquid and factually stable asset in terms of its importance to the global economy. It's a familiar asset used in the global economy, and then turning that into a usable cryptocurrency. Unlike Ripple, this is a project that is in development. We're in beta testing now, But the basic idea that we're trying to push forward is that in order for people to adopt digital assets, those digital assets need to be based on something that you in fact can touch and feel. And then the other very important point about this is that the asset itself is something that on a global basis is understood by governments and can be accepted as a regulatory compliant product. And so we've spent, as I know many of the folks on the panel with me, lots of time with government agencies in the United States and elsewhere, putting together a structure that treats our currency as a security and ultimately take advantage of the relative clarity in the securities laws to move the project forward.
So we'll dive deeper into all the other panelists' projects, but I wanted to first hear from everyone. So Katya, this may be where the planning might have come into play, but can you talk a bit about kind of the most obvious legal considerations that need to be taken into account if you're doing a commodity-backed play? What the pros and cons might be?
Wow. So I think that there are a lot of regulatory concerns that need to be taken into consideration with respect to commodity-backed plays and with respect to working in this industry in general. I don't know with respect to the audience, the level of familiarity with blockchain, with cryptocurrencies, and what the regulatory environment has been, in particular over the past couple of years. But one of the biggest issues has been with respect to the classification of cryptocurrency, with respect to the classification of these offerings, and the fact that we have different regulatory bodies across the federal government that have taken a look at these and looked at them in different ways. So with respect to commodities versus securities offerings versus the IRS, which has chosen to tax cryptocurrency as property instead of looking at it as a true currency, and so on and so forth, we've had a lot of confusion on the federal level with respect to how to take a look at these different structures. And I think that as we've been moving forward within the industry and taking a look at different ways of using this technology, using cryptocurrencies, there have certainly been a lot of issues, which I'm sure all of you have faced, with respect to figuring out how to mold and shape what it is that you want to do and how to realize your dream within the current construct that we have. The other issue that we have is beyond the United States, countries around the world have been tasked with trying to go ahead and classify tokens, token offerings, cryptocurrency, and the like. So, for example, in Switzerland, you have FINMA, which is sort of like the Swiss version of the SEC, which has come up with 3 different ways to go ahead and classify cryptocurrency. It can be classified as a utility offering. It's as if you're selling a service or a product. It can be classified as a payment token, meaning that it truly is a cryptocurrency, or it can be classified as a securities offering. And you can actually have a hybrid. In the United States, we don't have that level of clarity. And that's something that's become quite difficult. It's become a lot of fun for people like me. And I'd certainly be very interested to hear more about the struggles that everybody else has gone through here in figuring out how to move through that regulatory framework.
So to kind of piggyback off that, I recently read an article about cryptocurrencies and government, right, and their interplay together. The conferences that I go to more tech-focused conference, and it's a weird mix of people in suits and full anarchists, right? So now, however, we're seeing more, corporate involvement, more government involvement within these different projects, and the article was basically explaining the surprise that governments aren't exactly as hostile as we expected them to be to cryptocurrencies like Bitcoin, all the way to cryptocurrencies like Ripple. So Patrick, what has been your experience with government? Have they been nice, or has it been kind of a hurdle? Your experience with government, with Hedera.
So I think you captured it well. We're in active discussion with government right now across a number of different regulatory bodies. We're educating. We're trying to make sure that we're doing, everything possible to be as transparent as possible with them. But they're not going to, sort of give us any really strong guidance here. They don't have it yet. I think they're still formulating it. So, we're doing everything possible to just keep them abreast, let them know what's happening, and make sure that we're not doing anything untoward that might have a negative effect on us at some point.
I mean, I think you see with governments that with all the regulatory agencies that Katya's referring to, the IRS, the CFTC, the SEC, to a hammer, everything's a nail. So they're seeing, blockchain and cryptocurrencies. We use the phrase digital asset to sort of try to capture many of the notions that go beyond, cryptocurrency, but whatever you want to call it, and because it's not a currency and it's not a security, and it's that these things are not property. They're something different, and we're trying to use the constructs of the past for this technology of the future. But what I've found, in the 9 months so I've been at Ripple, I'm really surprised actually how thoughtful U.S. regulators are. I mean, when I turn on Fox News or MSNBC or something, and I see the insanity that comes out of Washington. The meetings with regulators have actually been really sane, and my meetings with people in Congress have been very thoughtful, and they ask really good questions, and they're trying to get their head around it. But I suspect that's different than it was even a couple of years ago. That there really is an understanding here that this is a legitimate technology and a way to solve big problems in the world right now. It's not just the problems of hitmen and drug runners and money launderers, that there's real technology and real technological need for this technology. But what I'll also say, and it's important here, is that other countries are ahead of the U.S. when it comes to regulation. And you have countries that might not be in your radar, in Malta, in Singapore, in Switzerland, in Luxembourg, that are very actively making a decision to create a regulatory framework to allow entrepreneurs to come to those countries and say, start your business here. Silicon Valley might have had semiconductors and might have had software. Our country is going to have blockchain. And they're very, I've spent some time in Singapore lately, and they're very actively courting companies that want to develop there with some clarity in the law, because they recognize that in a global economy, entrepreneurs can pick up and go with or without $10,000 in a suitcase and start a business. And I think that's what we're seeing globally, is that the U.S. I think it's unclear where the greatest development of blockchain is going to be in the future, and it might not be this country if the regulators don't get a clearer rules of the road. There are a set of rules for the road, I should say.
Dan, there's actually a pretty good question on the screen for you. So oil prices, unlike other commodities, can be controlled by a small number of countries/entities. Why not use a more stable commodities such as gold? I guess the question is, how do you avoid OPEC?
Sure. So when we thought about what ought to be the backing for cryptocurrency, we asked ourselves the question: is there a need to create that asset as a cryptocurrency? Can you do something different with blockchain technology that you can't do without it? And if I wanted to take gold, I could buy it now. I could hold it physically, and I don't really change the value proposition. So to us, the question was: is there something that we could do to change the value of the oil commodity by turning it into a currency? And what we found as we worked with this problem is that right now it's basically impossible to own oil unless you're an oil trader or a sophisticated investor and then located in the United States or a developed market. It wasn't until earlier this year that China first introduced their oil futures exchanges, and there are probably nobody in here who has a retail investment holds an interest in oil. And so we set out to create a digital currency backed by oil that you could actually hold. And the way we do that, in a sense, is by creating a pool of assets and then tokenizing interests in that pool. And so what was challenging to us was the ability to create something that wasn't existing previously. And right now, as you go around the world, it's basically impossible for individuals to hold oil, and in particular to hold oil in its spot value, which has material trading needs for a variety of uses, both in and out of the oil industry. If I can, on the regulatory piece, so I spent 25 years of my career as a lawyer before moving into the digital asset space, and ran the private equity practices at two large major law firms, and we've spent a lot of time thinking about, are these things securities? Are we dealing with movements of money? And is there something that's going to change? And the conclusion that we've come to, spending time with the SEC, the CFTC, Treasury, groups outside of the United States ultimately is that the laws, particularly in the United States, aren't likely to change anytime soon. And so, in a sense, to me, the issue isn't really a question of are we going to get the laws changed? Because as we see politically, that's not likely to happen anytime soon. So it's really a matter of complying with the laws as they're written. And I think people looked at this very important technology and said the law ought to adapt to it. Maybe that does happen. It certainly doesn't happen in the short run. Our strategy has been to recognize that what we're doing is both a commodity and a security and comply with the laws as written. And really more importantly, and Cory, I think you made this point, we're engaging in the business of transferring money on a global basis. And so in doing that, we do think that there is an importance to the laws governing the banking system and complying with them.
Katya, this one's for you, actually. And I've been thinking about this for a long time as well. What are some of the top barriers for mass adoption of crypto by consumers, and why do we still see speculation as a top use case?
Sure. So some of the top barriers for mass adoption of crypto by consumers, part of this is regulatory. I think part of this can be answered by the rest of you a little bit more with respect to where we're at with regard to the technology. One of the top barriers for mass adoption really does go back to regulation, and I do agree with you. I think that we already have regulations in place, and it's important to just play by the rules and figure out how to do that while at the same time having some eye toward the future and how we can shape this industry a little bit more and have better clarity and more regulation in the area. One of the top barriers has to do with investment. So with respect to classifying OilCoin, for example, as a security, as a securities offering, if you're doing a private offering, then generally speaking, you are subject to certain exemptions which allow you to go ahead and promote your investment opportunity to accredited investors, which means individuals who have reached a certain net worth. What this means is that the average consumer, the average retail investor cannot participate. So back in 2017, you had a lot of ICOs, initial coin offerings, that had called themselves utility offerings, that went ahead and were able to crowdfund and raise capital or sell their token to the mass public. And you then had the Securities and Exchange Commission come out and take a stance against that. We still don't have full clarity on what constitutes a utility token, if anything does, versus what would definitively be a securities offering. I certainly have my position and my thoughts on it, but I don't think that we have any clear and concise regulation just creating a very hard line. That's usually one of the biggest barriers. So it's really access, who's able to participate. And then with respect to speculation as the top use case, I think that that's more of part of it is regulation. I think part of it has to do with the technology and the fact that most projects just aren't really there yet.
Definitely.
Well, and there were also definitely a lot of crooks in this space who were trying to skirt securities laws by selling something else that was, their only desire was to take money from investors. And the results of most of those ICOs, most have collapsed over, I think 53% in the second quarter did not achieve their funding goals. That, I think people are onto that as a funding scam, I should say.
So I just add, I'm a product guy by trade, so I've spent 20 years building products for sort of people to use, and there's basically a lot of speculation today because there's really not much else you can do with the technology today. It kind of sucks. There's not much you can do when things only go at 3 to 4 transactions a second and take 5 to 10 minutes to clear and cost dollars to basically pay for each transaction. So I think that the first generation of sort of blockchain, cryptocurrency type stuff, I think has brought it to people's attention as to what could be possible with this technology, but we're going to need, I think, sort of next generation techniques to actually bring this into the mainstream where we start to solve the performance problems, solve some of the problems we're seeing around, the proof of work and sort of the use of so much electricity to do that. The cost of it has to come down. And then maybe we can build an app that actually consumers care about and will actually want to use, and that's 10x better than the alternatives that are there today.
Well, it's a nascent technology, right? So it almost mirrors what happened in the .com boom. And what I tell people all the time is, or what I tell my students as well, is a lot of the products that we're trying to make now is almost like talking about making Netflix back in '94. It's there, but the infrastructure isn't ready.
I mean, the metaphor I use is similar, and I was around with the .com. I covered that as a reporter back in that day for the Street.com and the Industry Standard and CNBC, where I worked at the collapse of the .com bubble. But I think the big difference is, the early creation of the internet, the creators of the internet had a notion that if they made the network free and the technology was superior, by making it free, it would propagate. If you could make it free, then people build applications on top of that because it was free and it was good technology. And so what we saw is that the greatest value, their telcos made a lot of money on the internet, right? The hardware makers that supply the telcos did. The creators of the software that kind of operates behind the internet and the software companies made a lot of money. But the greatest money was at the top of the stack, was the applications. The greatest money was made by Amazon, by, not by Netflix, but by Amazon, by Facebook, by Google. That's where the real money has been made in the internet. The creator of Bitcoin had this great idea that, whoever she is, that you would propagate the network by making it, by putting a value on the nodes of the network. And that by enriching the minters of Bitcoin, you would create value on this very, very early layer. There wasn't any value to be created with TCP/IP, right? It was basically free, so there wasn't a lot of excitement except among the geeks, right? Among the people who could really see the technology, and it rolled out over the course of decades. I think there's tremendous excitement about blockchain because we've seen great big prices put on XRP and on Ether and on Bitcoin and others. But it's still so early because there's excitement because of the price, but there's not really the technological development that when the internet got interesting because of .com stocks, it was already decades old. That's not the case yet with the blockchain.
Well, and I think the argument also is what precipitates the other. Is it the infrastructure that kind of lays the foundation for apps, or is it apps that then define infrastructure? It's kind of a strange circle. We've got under 4 minutes left. Is that right? Under 4 minutes? Yeah, really? Okay. Let's do some final closing remarks. Dan?
What's really exciting to me is that the blockchain technology ultimately represents the ability to connect on a peer-to-peer basis globally, and that doesn't really exist in other ways. And so when you speak about excitement, to me it's not really about price. It's really about the global connectivity. And right now, the projects that are being worked on are ultimately commercial in nature. It's really how to transact and trade value. But because this technology does connect on a global basis, there will be other sorts of applications. And to the question of what's the killer app, completely unclear. Nobody really knows. This is all about laying the foundation, some of the great things that Ripple's done up until this point. But that connectivity will change in profound ways. And from my perspective, the most important thing ultimately is global access to capital that will change the economy. Because right now people have dealt with lack of stable currency, and things will change as a result of that.
Patrick?
Sure. So I think the biggest mistake we made with the internet 25 years ago is that they didn't incorporate a payments layer. And they could have done that. There was actually some research at the time. They could have brought it in. And the fact they didn't was a mistake. It's resulted in all that spam you see in your inbox related to free email. It's related to your loss of privacy in relation to those free services like Facebook, everything like that. So this industry has momentum. It's going somewhere. Things are going to happen. It's very exciting. So I'm just looking forward to Hedera sort of being a part of laying sort of the new rails for sort of payment services and other stuff like that that's going to actually solve some of the problems we've seen for 25 years or so.
Gotcha.
I mean, I would go as far as to say today is really a watershed moment for me. The first time that I went to a blockchain conference, there were about 7 people in the audience. Half of them were asleep. Nobody really understood what was being discussed, and that was it. And that was only 2 years ago. Since then, I have attended dozens of conferences. I've spoken at many, many, many conferences, and they're all blockchain conferences. And this was the first time that I was actually invited to speak at a mainstream tech conference. And to me, that was something really interesting and really exciting because I'm seeing how this industry is now starting to move forward and captivate, capture the minds of a whole generation. I know that the technology isn't fully there yet. Obviously, that's something that we've all discussed. The regulation is still somewhat unclear. How this industry is going to pan out is still unclear, but I'm very, very excited to be part of it.
Yeah, I mean, for me, the thing that gets me, we sell software to banks. We sell software to financial institutions. That's not the most exciting thing to do every day, right? I mean, I think it's a great big business opportunity for me. But what's really exciting to me is this notion of what happens when you can send, I mentioned before you can't send 50, you can send 50 euro, but it's not worth it. But you can't send 50 cents. Somewhere in the world, there is someone who will do work for 50 cents that you want done. Someone can make your life better. You can change the economy of a place right now if you could only get the money there. The work can get you, the data can come back to you, but you can't get the payment there. If we can change that, if we can suddenly globalize the economy, the money in the economy, then you have an entirely different world where you've created an economic opportunity for people all over the world who are disconnected from our financial systems, not because they're disconnected from data, and not because they're disconnected from the world of shipping and even movement of stuff, but they're disconnected from a place where value can go from someone who's got it to someone that needs it and earns it. And once you change that, you energize an entire section of the world, a place in the world where people can really contribute to a global economy. I think you make the world safer, you invite participation, you increase the safety of individuals and their access to the rest of the world. I think that's we're right on the cusp of that, and that to me gets me really stoked about what we're doing at Ripple, and I think that's what really starts to change the world as it relates to blockchain.
And I'll just throw some last final words also. I'm really an educator at heart, so read CoinDesk, Cointelegraph, read about the technology, look at these different projects, look at them from a technical perspective. In the next 20 years, we're going to see a great infrastructure inversion, which is what they're calling it now. Back when there were dirt roads and cars were not a comfortable thing to have, and the infrastructure wasn't ready. There weren't gas stations, wasn't anything. Same with telephones and the internet. We're going to see the same kind of inversion with banking and some kind of DLT blockchain. So thank you, everyone. Thank you, panelists.
Thank you.
Have a good day.